designer bags right under my eyes get into this money. Now I know exactly what a lot of you are thinking. Roy, what the fuck are you talking about? CPI dropped and the markets have just been consolidating. What are you talking about bags under your eyes for? And so I'm here to explain exactly what I mean by this. Number one, I'm not trading today. Okay. Mostly because I'm not in the right headspace, mostly because I'm tired. And so I see the opportunities, the levels are the same. If this caffeine kicks in time while I'm on this stream, then maybe I'll take another re-entry. But the buys are still valid. The trade idea is still valid. We broke through TP1 from the trade idea of yesterday. Oh, we broke through TP1 with this trade idea from yesterday, and then we hit a 2.6 to 1 R overnight. So it was a great trade idea. The re-entry and the execution was perfect. And now I think we get a re-entry. So let's take a look at this. Damn. There's somebody fucking WrestleMania going on upstairs. That's crazy. You know, they say don't try this at home. I think they're trying this at home. The hell's going on up there? Okay, we got the Australia session lows right here. Parse this up. And this is how you guys know the strategy where I'm so freaking tired. And this is still about to be a fucking 45-second analysis. Nice. Get this stuff out the way. Nice. Roy, are you complimenting yourself as you narrate? Yes. Kind of like a Gordon Ramsay situation. You know how he's just always giving himself props because no one else is going to do it? He'll like throw salt in the pan. He'll be like, oh, beautiful, right? It's like, bro, what? How did, are you complimenting your, so that's what I'm doing right now. So news, same exact pattern that we always trade. Let's take a look here. Do you guys see the phases? Chart Addicts members, put a one in the chat if you see the phases. Clear liquidity on both sides. Right now we're retesting. Roy, what are we retesting? The wick. Yep. There's an entry right now, people. There's an entry right now at this 88.6. So I'm not trading, but I will paper trade this just to show you guys. Just really, it's for me, it's more so to practice than anything else. So let me actually just take this. Okay. So here's my two options. One of them is a smaller time frame, kind of the scalp entry from the pattern that we were just looking at. So we have the wick below to grab liquidity, and then now we're retesting that wick. Another idea is this is the swing low and this is the swing high. So what I would do is mark off the low, mark off the high. And that would mean we're looking at 17,907 as the second entry zone. So if we do violate this and we start to break down, there's 17,907 for the re-entry opportunity right down there. All right, so very good chance that we do stick around here and make this double bottom. I've seen this during news quite a bit, is where you have that violent wick to both sides. And then instead of the market filling the wick, it'll come down for like a double bottom. And then this candle will wick up as well. Now, there's no guarantee that we're going to see this wick up. That's why we always have a plan B. As good as plan A is, you always need multiple scenarios when you're trading to make sure that if the first trade idea doesn't work out, we can take the second one. Okay, but this is very straightforward stuff here. This is the trade idea from yesterday in case you guys missed it. Pretty straightforward stuff. All right. Reminder for everybody who's watching, the NAS100 Masterclass is in 9 days. Make sure to grab your seat before seats are full. The NAS100 Masterclass is the most effective online class to learn a trading strategy that works. Learn a strategy that works, build confidence for the year ahead, and make sure that you make the most out of your 2024. Head over to chartaddictsfx.com. Link is in the description. You're welcome. This could change your life. All right. Next up, we have a ton of great interviews dropping on the channel, so make sure to check those out. And then last but not least, the #1 conference for traders, investors, and entrepreneurs is in November of this year. So the FX Summit Conference is going to Dubai. It's our first time doing an international conference. I'm very excited for this. And I would love to see every single last one of you there. Make sure to go and take advantage of the early bird ticket sales before it expires at the end of this month. Grab your tickets half off. It's the #1 most anticipated conference in the world for traders, investors, and entrepreneurs. We'll see you there. All right, let's get right back into the show. So I had to go back to make sure I didn't, lose all of my markups. So now I'm going to head down to the smaller time frames. Interesting. Walter, did you have a question? Or yeah, it looks like the candle is going to fill this wick. Let's take a look at the CPI news here. Let's take a look. Let's take a look at CPI. Wow. So CPI came out slightly higher than expected. We were talking about this that if inflation comes out higher than expected, that would be bearish for the stock market. So probably should have looked at that news a little bit more carefully before taking this trade. Again, that's why I said I'm paper trading today. Told you guys I was off my game, and again, I made the right choice. Core CPI, excluding food and energy, prices are still up. So you take gas prices out of the equation, you take grocery prices out of the equation, consumer household goods, your toothpaste, your cleaning products, diapers, everything in between, still moving up. So the rate of change still getting higher. Headline CPI on a month-by-month basis was no change, but the annual CPI print went from 3.1 to 3.2. Now, is this something that's going to shake everybody up? No. But as you guys know, we've been talking about the likelihood of the Fed cutting rates in the next meeting. And that's kind of been the topic, is like, is it going to happen in March? Is it going to happen in June? Is it going to happen in May? And the likelihood of a rate cut gets lower and lower with each meeting. So with inflation still having an uptick, I don't think Jerome Powell is going to announce a rate cut in March. And I don't think he's going to announce a rate cut in May either. We may not see the first rate cut until June. But I think the market has already started to price that in. If we don't get a rate cut in June, I think that we see a very bearish summer because the markets will have started to accept the reality that there's no rate cuts coming. There's only two, maybe three, and they're going to happen towards the end of the year. Inflation ticking back up, no bueno, not good. All right, yeah, this is not one of those high probability trades. This thing has already filled the wick, headed back down to the downside. The second opportunity would be right here, 17,910, and it would look like this. Gonna have to cut this loser. This is a paper trade, by the way, for everybody watching on you. This is paper trading because I'm not trading today. I woke up really just beyond tired. I wasn't even going to stream, but I'm a man of my word. I'm a man of character and I'm a man of dedication. And so if I told you guys I was going to stream, then by God, I'm going to stream. But that does not mean that I'm going to put my personal capital at risk to take trades if I'm really tired. And so, yes, I'm paper trading this. I'm not live trading this today. I want to make sure that I make that abundantly clear. That first trade idea, it was a good try, but 15-minute structure, 30-minute structure, not strong enough to give us the push that we really need. So now price is coming back down. And of course, the fact that we have inflation ticking back up could mean a bigger and more exaggerated drop for NASDAQ. So NASDAQ hasn't had a reason to go bearish yet. You guys, we've been talking about this for a while. One bad CPI print could be enough. And I actually, even though price is coming down to that 19 or that 17,910, I want to give this thing a second to see if we break through. A very good shot that we break. There's a very good chance here that we break through just based on how bad that news was. Okay, so the re-entry is at 910. Like I told the squad, if the caffeine hits while I'm on this call, then I might take the live trade. But otherwise, yeah, no need to do all that. Okay, if I can give an understanding of inflation right now. Inflation has been the main topic for the last 3 years. So after the money printing, because it's important to recognize how we got here. After the record amounts of money that was printed as a response to the 2020 pandemic, what we saw is that there was two main issues. Number one, because of the beef that's going on in the world, supply chains started getting constrained. China had shut down their borders. Most countries had shut down trading with others because of COVID and trying to stop the spread, which created a massive supply shock, meaning that if it's costing everyone more money to move goods around the world, then eventually the consumer will have to pick up that cost. So prices have gotten way too high because of the supply side dynamics. And then on top of that, in America, we printed so much money. People were sitting at home with no work, and they were getting stimulus checks at the same time. That created a lot of demand for goods. And so whenever you have a lot of demand and then supply is hard to come by, that is exactly when you see prices start to go up. So we had close to 9.4% inflation in 2022 at the peak of this nonsense. 30 something percent of all the dollars in circulation were printed in 2020. Inflation became the headline topic. The Fed stopped focusing on their core mandates and instead made their core mandate getting inflation back to the 2% target. And then since then, we've managed to go from 9.2% or 9.4% all the way back down to 3.1. And then by today's print, now we're at 3.2. So we have made a tremendous amount of progress, but we're still far away from the Fed's 2% inflation target. The problem is that during Jerome Powell's speech last week, he said something that nobody really paid attention to, but he mentioned the flexible adjusted inflation rate or the flexible adjusted target. It's the FATE, FATE, flexible adjusted Fuck, why am I? So I told you guys I'm freaking tired. It's flexible, adjusted, inflation targeting. So it's IT. Okay, FAIT. Which means that instead of having to target 2% inflation, meaning right now the number came out at 3.2%. Now, if what I'm saying is true, that means this is so far away from the Fed's target, the markets should crash because of how big of a miss this is. But because of the FAIT, the flexible adjusted inflation targeting, it means that the inflation rate has to average out to 2%. So this year it's 3, next year it's 2.5, and then if there's a year after that's like 1%, which also, by the way, not gonna say that this is a great entry here. We'll put that one off. This is a 1 minute time frame. I'm gonna finish up the discussion about the fundamentals here in just a second, but just for my folks here, we have the pre-session consolidation. Look at where that first fake out was, second fake out, and then we have that trending move. If we see a reversal pattern at this daily zone, this is going to be the perfect re-entry opportunity here. All right, so just wanted to make sure I showed you guys this is a 1 minute pattern. We don't typically do that, but it's important to really just, I want to say, train your eyes to see the different phases as often as you can. This is a bit of a tough one because the best entries are down here, but until it breaks back above that 88.6, there's no confirmation for me. So this one's a bit tricky. I'd have to wait for the rejection. But by that point, I feel like it'll be too late for the entry. So I'm gonna let this one go. Let me finish talking about inflation real quick. Flexibly adjusted inflation targeting means if you have a bunch of years of more than 2% inflation, then you would just have to have a couple years of less than 2% inflation, which is this was the Fed's problem before, is that they could not create enough growth and inflation was always coming out less than 2%. We were trying to stimulate the economy. So what does that mean is that we're going to have some years where prices are fucked up. We're going to have some years where even though the Fed keeps saying 2%, 2%, we could miss completely and it's still not a problem for the Fed, which is confusing to a lot of economists and a lot of traders. All right, so that's what's been happening. We're no longer really targeting that 2% rate. It's just something that's adorable for the Fed to say, oh, we're targeting 2%, right? Nice. No, you're not. You're targeting the average. We could hit 10% inflation, and if next year we hit 0.1% inflation, that'll average out. All right, there's an argument here for this re-entry for buys. There's a real argument here for this re-entry for buys. One more dip down. No rushing. I tell the team all the time, this is one of the top 10 principles that I look for or that I follow when I'm trading NASDAQ. But rule number 3 or rule number 4 is it's better to miss a trade than to chase a trade. Okay, so I have this trade idea. I told myself I wasn't going to be on the charts because I'm tired. I showed up here. The caffeine started kicking in. I found two great scenarios, two great opportunities, and now I want to take the trade. But the market is too far away from that 1910 entry. So the thought that's going through my head, and for the mindset folks, we talked about this at length yesterday, but really kind of getting clear about your thinking process while you're trading to figure out exactly what narrative you're telling yourself that's causing these bad habits to happen. And the narrative that's going through my head is the trade is right here. What if the market just flies and it never comes down to 910 and you miss the trade? What if people in the comments section say that you can't trade because you didn't take a trade? There's like a million different thoughts that'll run through my head if I allow that to happen. You guys got me? And so I always have to remind myself the logic versus the emotions. The logic for me is I'm not interested in just being in a trade. I'm interested in the market coming down to my entry so I can have the best risk and reward opportunity to make money. I know my system, and the better the risk and reward for these trades, the more money I'm going to make. It's not just, how confident is Roy about the market ending up here? Oh, so confident to the fact where I'm going to enter at this current price just because I want to be in this trade. Now, let me show you guys the difference here. If I wait for the market to get down to 910, I have a 4.2 to 1 risk and reward. If I had entered at that current price, it's a 1-to-1 risk and reward, which isn't the end of the world, but that's also not the goal for me, right? I need a little bit more margin for error there. Even if you waited for that 61 retest, you would still be at a 1.7 to 1, way better than entering at this current price. If you waited for a double bottom of the wick, even, you'd still be sitting at 3.3 to 1. And then if you waited for that best entry, you'd be sitting at a 4.5 to 1. Now, I know exactly what the new traders are thinking. Roy, what if it never comes back down to that entry? Then you'll miss the trade. And that's when I'll say, yeah, probably. Welcome to the game. This is how it works. If you can't be mad about missing a trade you didn't take. If you were going to be mad about missing the trade, you should have entered. And so I never beat myself up for not taking a trade anymore. Like, okay, I don't say never is a strong word because we're all human and we all have moments of genuine weakness. But when I'm in my good state, yeah, ain't no fucking chance I'm gonna let FOMO or any of that seep into my mind. But we all have those days, man. We all have those days. Like nobody is perfect. And if you guys are following people on social media and you're expecting people to be perfect and you're building this ideal of who someone is because you see them on socials, I want to remind you that the shit that you post on socials isn't even the full picture. So what the fuck do you think these influencers and stuff are doing? Right? I'm not saying everybody people are lying, but I'm saying like if someone's posting on a plane and then on a restaurant, or if someone's posting, I don't know, like they're probably not even at that restaurant. That was probably like days. I don't know. Nothing that you see on social media is real because it's a highlight reel of people's experience. All right. So do not chase perfection, chase progress. It's okay not to take a trade if you don't, if you don't see the opportunity, if your edge is not present, or if you're not in the right mental state, et cetera, et cetera. We all know the drill. Are you still looking for buys? It looks like it should go down the rest of the day. What do you mean should? Based on fundamentals from the Sunday market outlook. I'll give you that one, AB Mike. You're right. What about buying at 17,742? I have not looked at that level, but it's probably a very valid buy zone. What I do is I look at local structure first. Okay, so this local structure has a very clearly defined swing low and a very clearly defined swing high. This gives me the perfect range. This is the very basics of what we teach here at Chart Addicts. And so for me, it's the discounted opportunities are at the lows, the premium opportunities are at the highs. And so I'm going to trade this local structure until it gets broken. If the market violates, then I'll look for that 7 whatever level that's sitting right below liquidity. But until that happens, I'm going to trade the range. I'm going to make sure my stop loss is just wide enough to account for any of that BS. And yeah, I don't know if I can put my stops wide enough for a trade like this. Let me see 770. This dude might be a genius. This dude might be a genius. Oh my God. Well, this is the trade that we took yesterday. Wow. This is the entry we took yesterday. God, what a good trade. Such a good trade. And now we have this inverted head and shoulders. Left shoulder, head, right shoulder, break above the highs, hit the previous kind of swing, and then come in for the retracement. After this full retracement, we're ready for the continuation up to the 88.6 on the top side. So, like, as much as I believe the market will continue to the upside, the best entries are sitting down here. Okay. So don't just look at, is the trade going to play out? Look at, is the trade going to play out? And is the market at a appropriate zone for me to get a responsible trade? Not just to be in a trade, but to get a responsible entry so that I can maximize my potential here. All right. I'm going to wait for that entry because ain't no rush in it. All right. I don't really have anything lined up on the docket today. Let me know if you have any questions in the comments. If not, today's going to be a relatively shorter stream. I will be streaming tomorrow for PPI, but today I woke up, I was way too tired, and I knew that live trading CPI with, like, when you're tired, gotta be one of the dumbest things you can do, right? Ugh. Mm. All right. I'm gonna have to get to work. I'm getting these emails already. Two favors I'm gonna ask from folks. Not even a favor. Actually, it is a favor. If you guys know any great brands in the trading space that you'd love to see out at the FX Summit, if you'd love to see them at the Expo, if you think that they're a big enough brand that they could potentially sponsor the event, please reach out to them. Let them know, hey, we'd love to see you at the FX Summit. Those guys were asking about you, and we want them there. So if you guys are any other group chats, if you're any communities, or if there's a couple brands that you trust that have helped you in your trading, that you truly believe in, that you think would add a lot of benefit to the event just for other traders, please invite them out. We'd love to see them out there. We're trying to find the best companies. And the only way to really do that is we can't trust the marketing anymore. We have to rely on you guys' judgment and you guys' feedback to let us know which of these brands have actually been providing value to the marketplace versus just having a really nice website and nice marketing. So it makes sense when you combine the structure and fundamentals, helps a lot. Buy limit locked in. I wouldn't enter the buy limit because if the market is very aggressive and just blows through, you want to make sure that you have the opportunity to get out, or not even to get out, but you have the opportunity to stay on the sidelines as opposed to feeling like you have to be you're forced into that trade. I'm coming to Miami in a couple of weeks. Any workshops happening? Okay, I'm coming to Miami in a couple of weeks. Couple of weeks. I mean, it depends on the date specifically. Um, I'm kind of getting to the point in my life where, like, oh, what are you doing next week? It's like, well, it depends on the day, and then it depends on the hour, and it depends on the minute. Because my schedule is scheduled off basically every 30-minute chunks has something in it. So let me know exactly the time. We'll be there. Two Step said, sorry, I'm late, bro, but I'm here, my guy, Two Step. Always good to have you on the streams. Market might be coming down for another retest, but this is essentially all I got. Anybody have questions? We'll cover gold and some of the other pairs here. So gold ended up having this kind of like this one-to-one push after the stream yesterday. Market came back for that retest and then had a little bit of a dip, broke under, retested during CPI, and now it's crashing back down, which means the dollar should be pumping back up above resistance. Oh, not yet. We're getting there. You guys know me, secret, super secret, top secret magnet indicators. Can't find it anywhere in the world except for this live stream. They don't lie. Even though we had a break below this structure, I'm confident that we see a recovery for the DXY, especially with inflation starting to come back up. I think we see a little bit of a push back to the 105.68 region. Magnet indicators undefeated. We've already had one magnet get hit. Now we're on to the next two. All right, so I think the dollar pushing back bullish means that we might see this pullback on gold, long awaited. Gold looks like it's going to crash all the way through. I'd be mindful about buying it. If you're going to buy it, I would look at only 1 to 4 hour structure, maybe even daily structure, and then only look at those 80 to 90% retracement levels for trading gold. Because if you're going to enter as the market is falling, it's going to be a very bad day. Looks like Bitcoin is not following the same script. We got the dollar pushing back bullish, which means that we have equities and commodities doing the opposite. But it looks like Bitcoin is still gearing up for new highs today. All right. Now, obviously, we're going to have to wait to see if there's a massive pullback. But if the dollar is moving bullish and Bitcoin is moving bullish, we're going to have to wait that out because that's not the usual correlation for both. This was the buy idea yesterday for a US 30 that someone asked for, and market never ended up hitting the lower of the two zones, but we are creating this higher low. We have this floor here. Okay, so we have floor, and then higher floor. So the re-entry would look like this. Yeah, that caffeine hitting. 38,530. Okay, because this is the support that was formed on Tuesday. Oh, today's Tuesday. This is when. All right, so this was the overlap. This was London right here, all the way through. This is pre-New York. Wait a second. Oh, that was last week. I'm sorry, guys. Okay, yeah, so this is the lows from last week. This is the push that happened today during CPI. Had this push up and retest, and just like NASDAQ, expecting another retest of that floor, but instead it kind of made this 50% retest back inside this range. For CA members, here's our box. That's the discount of the box. That's the premium. So a lot of people are going to buy it in the hopes of it just ending up at the resistance. And so a lot of new traders, they're more focused on just being in a trade, entering here, stops below this wick right here, just to get it up to the very top. The closer you get to your target zone, the more likely you are to see the reversal. That's why I would rather wait for this discounted price at 38,530, or if the market breaks that level, there's an even better zone at 38,190. Put a one in the chat if this makes sense. It says Bitcoin just broke all-time highs again. Yeah, it did. It's insane. But as a reminder, what I'm doing is I'm focusing only on the altcoins right now that have not moved. Give me a few altcoin ideas, and then we'll take a look at the chart and see if it's at a value opportunity or if the market has already started leaving. Will you take profits if you're up on BTC? The answer is yes. I mean, no, Bitcoin is the one instrument that I've stopped taking profits on because I never took profits on Bitcoin because I wanted to. It's only because I had life circumstances, I had bills, or I had something immediate, an emergency that I needed to pay for. I would have never sold a single Bitcoin because of how much I believe in that technology and how much I believe in Bitcoin itself. So every time I've ever sold Bitcoin, it's hurt me. Um, but I have no issue selling the altcoins. That's why I want to find these undervalued opportunities, put a couple hundred in each one, And then whichever one has the 10x, 20x, 50x opportunity will make up for the rest of the losers. And then I want to convert those coins over to Bitcoin because I want to hold as much Bitcoin as humanly possible. Okay. So we did gold, we did Bitcoin, dollar, US 30. Let's take a look at some of these tokens that you guys have mentioned. So we're going to do Cardano. We're going to do ADA versus the USD. And we'll use Binance's feed. Shout out to Binance. So Cardano looks like it's already moving. Wow. Okay, let's take a look at the monthly chart. Wow. From 9 cents up to $3.20. Guys, how many percent return is that? Hold on. 3.2. Let's say 0.09. Geez. That's a 36x return, people. So that means $100 would have turned into 3,600. $1,000 would have turned into $36,000. And then 10,000 would have turned into $360,000. Okay, these are the kinds of opportunities I'm looking for in the altcoins since Bitcoin's already moved. Now, we're back at 70 cents. So let me do a pop quiz for you. If we go back to these all-time highs, okay, at 3.1 from 0.7, how many X return is that? How many times return is that?
It's about 4x.
4X, is that what it is? I think you're right. Yep. Yeah, it's 4
Little.
point. So you guys see the difference. So $100 turns into $436. 1,000 turns to 4,360. Okay, so do you guys see the opportunity of buying at some unbelievable discount, like even 25 cents here? Let me do that math real quick. 3.17 divided by 0.247. That's almost 13x. Okay, so the people that bought in September of last year or December or January of this year, they could be up 13x if the market hits the previous all-time high. So from 1,000 to 13,000. If we enter right now, we have to accept that there's only a 4x opportunity. All right. And so I'm not going to be expecting the same big returns that I would be had I bought at the bottoms. And instead, what I'll do is I'm not going to put all my money into Cardano. Instead, what I'll do is find another coin that maybe hasn't started moving yet. That will do a similar movement to these altcoins. So XRP started moving as well. If we look at the lows of the summer last year, it's 0.31 cents. The previous highs are sitting right here at $1.96. So the difference is if we entered right now and we took it to the all-time highs, we're looking at a 2.8x return. And again, these returns are not using any leverage at all. When you're trading in your margin account, you're trading Forex, there's leverage. If it's a US regulated firm, you're trading 1 to 50 leverage maximum. And then if you're using, if you're overseas or anything, then you might be using 1 to 500, 1 to 400 leverage, which means that for $100, you can make way more than 2.8x. But because I'm just talking about buying these spot with no leverage at market price, this is going to be the returns we're looking at. Had we bought it last year, our returns would be double. It would be about 7x. We go 3, or we go 1.96 divided by 0.31. That would be a 6.3x return. Which is still great. You're not going to find returns like this in the stock market, for example. Like you might find individual listings or IPOs that could do really well, but this is where a lot of the opportunity lies in crypto. So I would say that I'd much rather wait for some kind of correction because the 2.8x is it's attractive, but I know there's better opportunities. I'll put some money in XRP, right? If I'm going to make money regardless, I still want to have positive investments. But how much of my money am I going to allocate? So if I only have $1,000 to put across all of my altcoins, all my crypto, then I can't put $500 in here. Okay, so what I'll do is I'll probably put $100 in each one. Or I might put $200 in this one and then put 100 in a lot of the coins that have not moved yet. Because the $100 will go way further on one of those coins that has not moved versus something that's already started to be in motion. Okay, let me see. Crypto is my gateway to FX. Right back at you, Josh. Looks like 88.6, just eyeballing it. Huh. Need stuff that can still go 5 to 8x? Dude, I'm looking for 10 to 50x opportunities. I'm buying gaming and AI coins. Smart man. I'm interested in those meme coins on Solana. Yeah, no chance. I mean, then again, if you're in the Solana community and you're keeping your eye on those and you're seeing the flow of where everyone's going next, then yeah, that could be great. Solana is on a tear. Wow. Wow. Yeah, Solana was one of the winners, man. And we've been saying this since day one. It's a cheaper, better, more efficient, and more developer-friendly version of Ethereum. Way lower fees, way more capability. You can still build all the same smart contracts on Solana that you can do on Ethereum. And they took a lot of Ethereum's developers because the developers were trying to build things cheaper and build things faster, more efficient, more open source. Solana, big winner. He says Ethereum is done. Ethereum's not done, but I don't have the same affinity for Ethereum that I do for Bitcoin. Bitcoin is one of those real kind of like timeless opportunities, one of the most unique assets we've ever had. Exactly, yeah. As soon as they dump proof of work for proof of stake, I think that that's where they lost all their credibility. So the Ethereum fees have skyrocketed for sure. And I think that the more people that leave the system, the less miners there are, the less mining capacity there is, the less efficient the system is, and the higher the fees become. And in order to incentivize the miners to continue to maintain the integrity of that system, they got to pay them real fees. It says BNB is a killer if it holds. It might be a killer for Binance, bro. Because if you look at what brought down FTX, it was the FTT token losing value, which a lot of people started to try and convert or trying to sell off and convert back to fiat or other cryptos, which created a bank run, which sort of brought down the entire exchange. This is the difference between Coinbase and then FTT and BNB. You don't think BNB was created on fake balance sheets, bro? BNB is the same exact thing as FTT token. They took loans on their balance. Yes. What do you think BNB is doing? You think BNB has a one-to-one for every single BNB, like a one-to-one dollar for every single BNB that they issued? Fuck no. They created a bunch of fake tokens out of thin air. They allowed people to use it on their platform in order to remove fees. People exchanged real money for BNB, and then they collateralized all this real money to go get a loan. in real dollars. And every time they wanted more money for the loans, they would just issue more BNB, get people to convert their real money to buy this fake BNB token, and then they would collateralize the real money for more real debt. And it just kept going. Said, you're right. I was going over my head. It's the same thing. But I mean, the whole game of these financial institutions is that at some point, the race is who can you get big enough that this is no longer a problem? All right. So a lot of these financial institutions, they were doing practices that are considered kind of sketchy, like kind of Ponzi-like. But at some point, you become so big that like you're allowed to run a Ponzi. You're allowed to be a bank, for example, where everybody deposits their money and then you can just create money out of thin air to lend out. And the more depositors you have, the more money you can lend out and get this debt, and then you're paying back people's deposits on new depositors' money. It's a lot of BS, right? But then at some point you become a bank, and so now you're allowed to do it. It says most of crypto is a Ponzi scheme. Welcome to the financial industry. Most of the financial industry is a Ponzi scheme. It said except for BTC. Oh yeah. Bro, that was a wild loop to milk. How they did is like private Fed is like a private money printer. Yes. I mean, this goes so deep. If you guys really want to know the problem with crypto, because I've been in crypto since about 2014, and then I really started to get into trading and investing in cryptos in 2016. The Tether scam. Tether is one of the original stable coins that was created to help people exchange on platforms with low fees, and then you don't have to sell your Bitcoin for dollars and create a taxable event. You don't have to off ramp it to your bank. Instead, you can sell out of your Bitcoin directly into Tether USDT, which was supposed to just represent dollars, a one-to-one. And this was supposed to cut a lot of the the costs, the inefficiency, the risks out of the market. What ended up happening is that the Tether Corporation started to get intertwined because the people that started Tether were this kind of like monopoly of the largest exchange owners, the owners of Bitfinex, the owners of uh, like the same people that own Terra Luna, the company that went under, the same ones that had money in Celsius, the same ones are the ones that own Bitfinex and BitMEX and some of those other large exchanges, Kraken and the rest. And they're the same ones who started a monopoly to start the Tether Corporation. And then it came out through an audit, I think it was 2, maybe 3 years ago, that Tether was telling people that they had a one-to-one equivalent of assets for every dollar that was in. They did not have $1 in the bank for every Tether that they issued, which is what they were supposed to do. It's their only job. The only job they had was to do the one-to-one. Instead, they had collateralized a bunch of Bitcoin, Ethereum, and some top coins in their balance sheet that were the equivalent of a $1, which completely just ruined USDT. Now, the thing about USDT that's important to recognize is that it is the backbone, it was the backbone of Bitcoin's price. The Tether scam was used to pump Bitcoin's price by issuing more Tether and then buying Bitcoin in their own portfolios to increase the price. So they were creating fake money and buying real Bitcoins too. This game goes so deep, and then you'll see the companies like Celsius, Terra Luna, like all of those were heavily collateralized in fake tokens that they had created. And then when the real money wanted to get pulled, like real depositors wanted their money back, there was not enough to go around, which is what happened to FTX. They created fake liquidity. Exactly, because it makes sense at first as an exchange like Binance. You create this token that will allow you to become a better market maker. And so if there's no one to buy your tokens on the platform, Binance can buy your tokens for you. They can be the market maker. They can be the liquidity. If there's no one there, they'll be the other side of your trade. But when you're starting to collateralize that for real money, you are over leveraged. You're using it as this sort of money printer to solve your problems or to sort of like get around a lot of the shady stuff you did. That's where it becomes a structural risk, where the first sign of trouble will completely destroy the exchange. So it wasn't a double bottom on the wick. It was an extended liquidity grab. Did not hit that level that I was waiting for, and then ended up pushing all the way back up. Had we entered the first trade, had we entered the first trade, which would have been here, would the market have hit stop loss? Yeah, I believe so. No, actually, the stop loss was set at 845 or 895, excuse me. 895. So it wouldn't have hit the stop loss, but it would have came pretty freaking close. So when I drew my fib from the lower range, nothing. If I draw it from the London lows of yesterday, you guys will see that it would have hit. Okay, but I'm going for body to wick. And this was the completion of that phase 3. So the trade idea was there, execution wasn't all the way there, and it's fine. If the market doesn't hit your entry zone and it's not like, oh, that wasn't the right entry, now let me jump into a random trade because I was wrong about the first one. It's like if I did not get the trade that I was looking for, then I'm not going to just enter a random one just for fun. Got to let it go. Are you trading NAS? Sorry if you already talked about it. Just joined the stream. Casperio, welcome. Just went over that. Polkadot, I'll take a look at Polkadot. That's a big one for me. Spell token, never heard of it. The founder of Ethereum backed this project. That doesn't mean much to me. He's got his own problems to take care of. I like Gala. Moonbeam, not in it. XRP, I'm in it. HBAR, have to check it out. Flare and Casper, have not heard of those. My boy's invested in goddamn everything, bro. Dirty Das, if you're gonna keep showing up here late, not asking a real, like not saying a full sentence and just saying, bro, NAS and gold, then you're never gonna get an answer out of me. All right, stop being goofy, be an adult, either type out a full sentence or scroll back in the stream to where I covered those two pairs. But you've been showing up here 3 days in a row, mad late, talking about, bro, US 30, bro, US 30. All right, you're an adult now. Let's use real words. Take a look at Filecoin. No, I'm not doing that. 1880, a little bit above TP3, but done. 88.6 boys to the world. Chris Brown, love to see it. VeChain. That's Gary V's company, right? VeChain versus Tether. Oh no. Wow. This thing is moving already. Jeez. It's still at 5 cents. And the all-time highs is where? 28 cents. What was it down here? Is that 14? Oh my God. 281 divided by, no, it was at 1 cent. 1.5 cents. Oh my God. From the August lows to all-time highs is 187x. So, yo, $1 would become 187. $100 would become 1,870. Wait, is that even true? Nope, that would be 18,700. $1 would become so 18x would be $18, 180x would be $1,800 or $187. No, I was right the first time. $1,000 would become 187,000. So yeah, this would be 18,700. This would be $1 would become wait, I'm fucking up my math so bad right now. Hold on. Okay, this is correct. 1,000 times 187. Obviously, that's 187,000. That's nuts. That is a just unbelievable return from 1 penny to 28 cents. 0.281 divided by 0.015. No, that's 18.7x. I need sleep. I need sleep. Take a zero off all these. Take a zero off these. I'm sorry, guys. That if you're still watching, I know it's coming. All right. Just it's early. From this current price, we'll do 0.281 divided by 0.049. It's still 5.7x. So from current price back to all-time highs is 5.7x. I like this. Almost 6x opportunity. This is good. Now again, if I had $1,000 and I was going to allocate $200 to VeChain, I'm not going to put the whole $200 here. I'll put $50 here. Okay? $50 here. If it retraces back down to these prices, I'll put $100 down here and get a much better entry. All right, so knowing how to scale into these, very important. Dollar cost averaging is crucial. And then looking for these high leverage opportunities. I think VeChain is one I'm adding to my list. I appreciate you for the heads up. Man, I was long in NAS, but got out with a little bit of profit because the weekly candle is bearish. I thought it was going to continue driving down. Don't trade what you think. Don't trade what you feel. Trade what is right in front of you. The market is not flipping unless an area of structure gets broken. An area of structure did not get broken. Therefore, the trade was still valid, but you allowed your emotion or you allowed your overthinking to convince you that what might happen was more important than what was happening in front of you. Okay, so we have this local structure right here. If this local support does not get violated and the market continues to create a higher low and the market is bullish, okay, because we came up bullish, we went sideways for a retracement, and then now we're starting to continue that trend. So you're in a bullish market. The local structure did not get broken. Everything is pointing towards this trade still being valid, but you allowed, what if it does happen, or maybe the weekly is bearish, to get in the way of your bias. So I would take a note of that before you get off the charts. Get out a notepad, write down the note, and make sure that does not happen again, because it will happen again and again and again and again and again and again, unless you are deliberate about making the change. I have not opened USD JPY, but I'm going to tell you, if USD JPY is rejecting the 38.2 Fibonacci level at the top and using it as support, I am going to be looking for buys. So, okay, so I'm going to open this up. I'm going to head up to the daily time frame. Ladies and gentlemen, what Fibonacci level is the market respecting here as support? All right, let's count these up. Roy, but what if it breaks the zone? What if? Let's look at what the market actually did do. When the market got here, it was support. Well, first it was resistance, and then the market broke above and used it as support, became our new support. We have minor support right here, and then the market used it as resistance. And then we have support again. And then my favorite, the liquidity grab. The liquidity grab, and then full expansion back above the highs, back above all these areas of structure, and then the retest, of course, at that zone. All right, so how would this trade look? It would be a buy limit order, which we might not get because the market is very disrespectful here on USD JPY. It might just keep going, but we don't know. It's always worth at least waiting for the pullback. And so the pullback would be either a double bottom or just a slightly higher low at 146.9. And then that would be the entry to the moon. Good stuff. All right. Now, I know that Josh put out a list. Josh, I love you, bro. But with all due respect, if you can't show significant track record of your investment with crypto, I want everybody here to, regardless, I don't care how successful Josh is, do your own research. Do your own research. There is no way that any one person has done a significant amount of research on this many names to the point where you're looking at their team, to the point where you're looking at the developers to see if it's even a valid project. That's going to be very hard to do. I love you, Josh, but just keep in mind that there's no possible way you did due diligence on this many names, like 50 names here. So yes, I agree for sure. I was like, bro, Josh, how are you going to say that BNB is not the same thing as FTT and then recommend 50 names? Why are you going to have to make me say that out loud? All right, NASDAQ trade would have been a banger, is a banger still. Um, and yeah, we got all the phases, people. We got all the phases here. Model number 2 for my masterclass, folks. And model number 2, we're usually doing 886 from the break or 886 from the previous low. The break was right here. And so had I drawn the fib from the break to the highs, I actually think that this would have been the perfect entry. But I did from the lows to the swing high, and you'll miss some. It's fine. Better than entering too early, better than entering a premature trade. Listen to Roy, guys. I'm here sad commenting. Josh, we love you, bro. I appreciate the engagement regardless. Said research is a must. No doubt. I'm fucking around, bro. Everyone catching strays. Just jumped on. Why are you not taking profit higher on NAS100? You can, but since we're trading futures now, I'm looking at the markets very different. The full move is the same trade from yesterday. I don't know how far back I'm going to have to go to get to my original markup. The markup from yesterday. Please have it saved. Please have it saved. Come on. No. Yeah. Okay. So this is the original trade idea from yesterday. The market came back and hit our entry from yesterday perfectly. Now that I'm looking at it, and then this was the target that we were looking at before, which is 18,340. And then obviously, if we're going to create new highs, we have this extension right up here. So when I was trading CFDs, I would always hold a runner just to see what would happen. On futures, because there's a risk of the market retracing and then hitting the trailing drawdown, you want to take your partial profits and you want to secure and shave off trades as much as possible. And I don't want to hold, I don't even think about holding after the session or anything. Whatever I get in this predetermined session between the first half of New York and second half, I'm walking away. Now I still, I'm on the side. I don't even want to say this because I don't want to inspire anybody here to do anything, but I'm still trading a margin account on the side. And I think I'm going to be doing that more often because the futures rules are just pissing me off. Like, I just want to trade. I really don't want to play this big fucking charade with these prop firms over like, oh, but 1% off and 2% and the FTMO rules were very straightforward. The balance-based drawdown, or sorry, the equity-based drawdown, but it was sort of like, it wasn't trailing. It was just total equity-based. Made sense to me. You couldn't trade news unless you have a swing account. Okay, got it. You can't hold through sessions or hold through the weekend unless you have a swing trading account. Got it. So by having a swing trading account, even though it was only 1 to 30 leverage, it did everything I needed it to. Right. And it was very easy and I understood it. These futures rules are like every firm has their own rules. I genuinely believe they're designed to make people lose. It's not designed to test your skills as an effective trader. I think it's like, let's just literally make the worst possible conditions of all time because the Forex people, they made their rules a little bit too easy and look what happened to them. They couldn't pay out. So we gotta make sure our business model is different. And so we're gonna make these rules just irrelevant to successful trading. Guys, if someone was trading my money, if I gave them $50 million, I don't expect every trade to go in one direction. Okay, I'm gonna have to accept drawdown. And if they're in a trade that's up $100,000 and then it retraces back and now they're like in a little bit of drawdown, they shouldn't lose the account for that. Okay, especially if they have a track record of, having swing trade ideas where the market will retrace back to your entry, just like it did today, this morning. Like if you were holding from yesterday, you would have been in deep profits 2 to 1 or 2.6 to 1. And then the market would have retraced all the way back down to entry. You would have blown the account on the futures firms. So just as a side note, I have been, uh, you know, I did open my margin account back up. Chart Addicts members on a call later. Maybe I'll tell you guys which platforms I'm using, et cetera, which ones I feel comfortable with, just kind of knowing what they're doing in the back end. So I'll talk to you guys about that on a private call. I said, does it hurt to see the market leaving without you? If you were part of the 3-day mindset bootcamp, which is 4 days, but congratulations, everybody. I feel better after the 4-day bootcamp. I feel like I have a better sense of awareness. I'm not overthinking as much. I'm giving myself a lot more grace just to do shit and not sit there and have some opinion about every single thing that I'm doing or whatever it is. Having more mental peace and just allowing the confidence to seep through. It was great. But then we focused on the last day about trading psychology. And this is one of those very important moments. If you did not enter the trade or you entered the trade here, got out early with a loss, and then didn't enter this trade, and now you see it flying, there has to be some emotional reaction. If not, then you're either in the enlightened phase or you just don't care. Right? So the emotional response would be like, damn, I knew it the whole time. I was right. I should have just stayed in. Shoulda, coulda, woulda. It's a bunch of hypotheticals. The problem with hypotheticals is they're not real. And in order to be a great trader, you have to live in reality. So this emotion could cause a lot of new traders to rush into the market and just enter at a high price, thinking it's going to end up here. And then instead, they get caught up in this big retracement. We enter the pullback, they get crushed on their trade, and the universe is all in balance. All right, so do not allow the emotional response that comes up from potentially missing a trade or feeling like you didn't catch the trade that you were supposed to. Don't let that get in the way. All right. Final reminder, ladies and gentlemen, learn this NAS100 strategy. Whether we caught the trade today, we're patient or impatient, the strategy itself works. The entry we caught yesterday is the same exact trade idea that's playing out today. And this is the strategy that we teach in the NAS100 masterclass. We have interviews all on the website, as well as interviews. Oh, my computer's freezing. We have interviews on our website, as well as interviews on YouTube from successful traders that have taken the classes. Highly recommend checking those out. chartaddictsfx.com. Link is in the description. Also, make sure to grab your tickets to the FX Summit 2024 conference before prices go up. Once we start to announce these big names, the big names, I'm talking about you guys know who I'm talking about, the Trading Views and the MetaQuotes and the Binances and everyone else, ticket prices will be going up. So if you're planning on going, trust me, the 50% off is something you cannot beat. Make sure to grab those tickets early, and then, you'll have the best opportunity to get into the #1 conference in the world for traders, investors, and entrepreneurs. Is there anything else we're missing? We're good? Schedule your coaching calls if you guys are interested in one-on-one coaching. Jacob and Bryce and Omer are back on the schedule. So even though I'm very occupied, I won't be doing coaching. We still have folks that are on the schedule. So book your coaching calls and make sure to do that, as soon as possible. All right. Happy, safe trading, everybody. We're hopping off. Take it easy. Peace.